Morning, boys, or evening if you're working in Australia. We're getting a bit more negativity through the markets. Now, yesterday we are talking about the potentiality for this, whether this is going to continue, whether we're going to get selling coming through, whether the dead cat bounce we got on the ASX was the sort of the smoking gun here that the rest of the market's going to be weak as well. Definitely got that for the Aussie. So I'm very happy that we did sell the Aussie yesterday during the stream. We have broken that key level 75. All right, now sometimes it is needed a little bit of retesting of those same levels to get the market ready to go to that next sell-off. Now we got that during the Asian session today. We got back towards that 75 level, not 275 though, 75, 74.95. This added a little bit of extra confidence to the sellers as we come through here in the start of Europe. Really, this whole game is about looking at the bond market, seeing whether this sell-off is going to continue. So you really should have a chart up showing the bond market moves. I'm going to bring a chart up in a sec showing you what's going on there. But the bond market moves are forcing risk-off trading going through to the indexes, and those indexes, that's leading across the safe haven buying for the US dollar. Also, the higher yields are making pairs like the Aussie and the Kiwi extremely vulnerable to correction, and we're getting that. I mean, we're getting that pretty much technically. Now we had the fundamental reason, and now we've got the technical break as well. Very likely this continues. Okay, so selling Aussie has been the game all day. If a number of times I've talked about this particular trade with clients, probably 30-40 times today during work, especially if they're long Aussie and they bought at 75. It's like, well, I think you're just wrong here. I think the market's going to be breaking down, and the potential downside is significant. We're not talking 73 as the bottom. We're talking 73 as the first target. It's been a while since we've had volatility. It's been a while since we've had a reason to sell off. It's been a while since the market's actually gone with a trade. There's been some negativity, like Brexit, or some issues with a couple of companies, but nothing really took hold. Even the China news last year really didn't take hold, and it sort of resolved as it disappeared off the screens. The type of news we're dealing with here, that global yields have reached a bottom and that it's only higher from here, is a sort of news which can last for 6 months. Yeah, can continue to be a theme for the next 6 months, and definitely, the potential for it to cause a bear market in stocks is extremely real. Yeah, I mean, it's you can't have a 6-year rally in the bonds, one of the biggest bond bubbles ever, biggest bubbles in any asset class, and not expect it to blow up. Now the question is, though, from every serious trader, whether this is the real deal, and we'll go over Citibank's analysis of that. They're on the bear side. I'm definitely on the bear side as well, and I'm excited to finally have a trade which can make 1,000 pips without relying on a 3-month grind higher carry trade type deal, like the whole buy against the US dollar because they're never going to raise rates sort of trade that we had going on with the euro to 120 and the Aussie to 80. Yeah, that trade was going to take ages though. Yeah, this downside trade with stock markets potentially heavily selling off is sort of trade you can get in 6 weeks to a month type of move. 500 to 1,000 pips, depending on how negative the market gets on the yield surging higher and how much of an effect it has. And also, when the market is negative, that's when you get the searching for negative news. You uncover all the hidden issues with different companies around the world when they go to refinance their debt and they can't meet it because it's the rate they're getting has gone up 1% in the last 2 weeks. You start to uncover more and more negativity news. Negativity breeds negativity in the markets, and that's what I'm hoping for here. An evolution into a complete fear-driven market that has lots of volatility and we can make lots of money from. So we're going to we're going to be sticking with the short Aussie, and we're going to be analysing a little bit more in depth about this whole bond market correction. Just slowly, this, yesterday I gave you the what is the bond, how's it work, yields and stuff. Today we're going to go more into specifically what the issue is, also what we need to be looking out for in terms of the central banks riding to the rescue, which they invariably do. All right, now the big one that you can expect in the next 2 weeks, so at some point in the next 2 weeks, could be as early as today, is the ECB coming out with something along the lines of this. Sources inside the ECB say the ECB is preparing to extend QE beyond March 2017 at the next meeting. Now the market hears that, then that's a 200-point rally on the DAX and a potential relief rally on the Aussie of 100 points. Will it stop the bond market yield surge? Maybe for a week, maybe for 2 weeks. Has the market got a little bit of a whiff of an issue? Yeah, so I think it's going to come back. I don't think they can band-aid this one. But the biggest thing they can do right now is for the ECB to put a cap here on the surging bond yields from Germany, and that would put a lot of less pressure on the BOJ and the Fed to do their job next week at their respective Fed meetings. So it's the ECB really started this when they failed. When Draghi failed to announce that extension, the market was sort of shocked. Everyone had told you that's what we expect. We want that now, and you don't come out with that. All these low yields that you've been working on, we're going to undo. And so the bond selling has been really fierce, driven mostly from the European bonds, but spilled over to global bonds everywhere. All right, so we're going to look at that shortly. Just going to have a look at some of these other trades we've got going on. We've got a Euro-Swiss trade. We've got filled. Don't actually want to be long Euro-Swiss in a stock market crash. Short Aussie we're going to keep. Euro-Yen. Dollar Yen's having a nice rally, but I don't want to be in that as well. Oh shit, I sold my Aussie. Now this is what happens when you have your profit ticker on. So basically we're down to short Euro pounds now into that BOE announcement. We can talk about that tomorrow because the BOE is going to be a bit of a potentially live event now that the CPI came in so weak. We just got the Euro pounds and we've got just our Aussie Kiwi longs. That's that long-term trade, remember, that we're going to try and get to 110. I want to put some take profits in so people understand why I'm in that trade. 110 at least, maybe 115. That might take a few months, so maybe even a year. Pretty confident we're going to get there though. So Aussie Yen has been a trade I've been doing back in 2015. Got a fair bit of that rally up to around about 108. And this is the same sort of idea. I'm in a little early, but I'm not going to add until we get a turn or we get the RBNZ being very weak. It's just a trade I'm in. It's a medium term trade. See how it develops later. It's definitely negative now. It is crushing people. If you don't have enough liquidity or margin to hold this sort of trade, don't get involved in it. It will wipe you out. I think the low end is going to be 98 on the downside. Alright, but that's not really a day trade that we can talk about too much. We talk about it enough. Many people are involved in that trade, wanting to know when it's going up, and it's not yet. We had a little rally today in the Asian session. That was mainly because the Kiwi's falling faster than the Aussie. Now, that could be a theme which does develop if the Kiwi breaks a bit of technical support. The same way that the Aussie has a support around about 75, the Kiwi's got a support around about 72. Now we break the 72 support, then downside's opened up a lot more. Still significantly far away from the 200-day moving average, whereas the Aussie tested the 200-day moving average, the simple one anyway. And so, we've already begun the downside, whereas the Kiwi hasn't. So that could provide a little bit of short-term relief. This is not the sort of relief you want for the Aussie Kiwi trade, though. The sort of reason you want the market to rally is more along the lines of the RBNZ, RBA divergence trade. That's the reason this will definitely pick up at some point in the next 6 months. But we might go to parity first. So disclaimer on that trade. That's pretty much a go to war type trade. Euro pound. Now after the CPI data yesterday, the pound got crushed. It allows the BOE to be more dovish than previously. Okay, so yeah, there's potential here. We're going to 86.50 on the top side. Fortunately, we're not in heavy, and this is a sideways moving-ish pair. And I think the worst of the selling of the pound is going to be post BOE, and then we get relatively outperformance from the pound going forward against the euro, as long as we start to see a pickup in the UK data. This is a UK recovery trade. Now, the UK recovery trade is something that made us a lot of money on the way down, and this is the first sort of trade we've been stuck in as the market's rallied. Let's look to evaluate this based upon the UK data coming in. It could turn up being 11. All right, but otherwise we're targeting around about 81, 80, 82. Now, am I looking to add to this? Yeah, if the data warrants it. If the data doesn't start to come in good, what we've had good from the UK is only sentiment data, PMI data. The actual real data, the CPI data, the manufacturing, official manufacturing numbers, they've been weak. So it is definitely not clear that the post-Brexit risk is over. And so the potential for more pound weakness is very real. All right, but that's fine. Now I got out of this Aussie trade by mistake. I will look to get back into it shortly. The short Aussie trade, maybe in this stream. If not, I'll put in a little sell order. And that's the way I'm looking to play the current market. Short Aussie, short Kiwi. Surprisingly strong dollar yen rally during the Asian session. It's getting wound back a little right now. Yeah, I didn't believe it either. Stock markets are too weak to allow this rally to really gain flight. It's mostly to do with the dollar yen. There's a lot of bond market talk at the moment from the BOJ. They're going to be trying steepening the yield. We'll talk more about that next week. I don't want to confuse you as to what that is. But basically they're trying to get some weakness in the dollar yen, but it is not working substantially so far. Interesting price action though. The break above that, I was starting to get a bit neutral on dollar yen from the bearishness I had. Good reversal candle in start of Europe. It's not really driving much of the euro rebound though, so you might have to be a bit patient. I think the European session is not going to be that wild. I'm looking to the US session as the next leg lower in the stock market, so that's where we're going to get the action and the follow through on the Aussie and some of the other pairs watching. We will see how that develops. So there is no rush on a few of these trades. The market's absorbing the recent bond spike yield. It's a slow burn sort of sell-off at the beginning. You remember, the market's been very optimistic that it can get past most things. And so there isn't any fear just yet, not palpable anyway. Not like some of the other shock events. This is more like a, oh, look at those bond markets. What's going on here? This is not good. Let's sell. And then it gets a little bit weaker. It's like, what does this mean, right? It's like one of them sort of issues. It's not like the Chinese devaluation issue. It's not like big banks defaulting in the US sort of issue. Let's have a look how everyone's going in, boys. Yeah. Hey Nick, hey Reza, hey Shindot. Pound Swiss. Pound Swiss is the same as the Euro pound, so it's under pressure right now. But long term, it's not a bad little buy on the dip. Let's have a little look at it. So it's fallen back down as the pound data's faltered a little. Let's see what the BOE has to say. I think the BOE is going to be dovish, using the excuse that the inflation's less than their mandate. and we might get maybe 127.50, 127-ish. I'm happy to be buying low rather than just buying willy-nilly. I've got enough exposure to the pound via my euro pound shorts. Lucky for us, the euro is doing nothing as usual. The euro is sleeping. Now, one of the big trades in the market is the Euro Aussie Long. We'll discuss that more in length. That's one of the main trades recommended by Citibank. And I do want to go a little bit more into depth about that. It's similar to the short Euro Aussie. It's just a different way of playing it. It also makes sense though. Alright, let's have a look at some of the trading signals in the room. See how everyone's playing this. Got to get myself off the screen, huh? Hide video. Don't have too much of an opinion on dollar Swiss. Swiss is a pretty good safe haven. So it's not the cleanest way of playing US dollar strength in a risk-off event, but gun to my head, I would rather be long than short for the next couple of weeks, right? Well, pre-Fed. I mean, Fed should be a very dovish affair. You know, Fed should be an extremely dovish affair, actually, especially if stocks are really weak going into that, right? Pound yen got my attention too, with that dollar yen rally. I think it was false from the dollar yen rally though. So we can go into that a little bit more. Basically, when dollar yen rallies, it can distort the text on the crosses. So this one started to look pretty strong in the Asian session, but it's all dollar yen. It's not the euro. It's not the pound. So you can't play pound yen, and just because dollar yen's rallying and it changes the feel on the pound yen, to think that pound yen's now obviously strong, when the pound itself is getting smashed around and the dollar yen rally is a little bit of a fugazi. So yeah, this one's a pretty dangerous trade. You got to know why the market's moving sometimes, right? So what's causing the technicals on the crosses to change? Is it a pair, or is it just straight up, you know, something specific to one particular pair in one of the majors? Oh, he sold Aussie Kiwi, targeting 97.80. What the hell? What the hell? Alright, he's targeting my stop loss. It shouldn't be buffering. It's coming through clean from mine. Maybe it doesn't like having the screen inside a screen. Maybe it's trying to process the short Aussie Kiwi. What is this guy? The enemy? Does he want to go to war with us? Nah, it's alright. I mean, look, it's technically very weak. I can understand why he wants to sell. Let's see how he goes. We'll give him a thumbs up for being on the right side of the market. Alright, we've already done a dollar Swiss short, dollar yen, dollar Swiss long. Yeah, I like that more than short. I'll see how that plays out. No, it's uploading. It's uploading pretty good. I mean, the stats I can see from the software I'm using is it's solid. We'll see if it changes after I get out of the view of watching what we're actually looking at. Maybe the stats are lying. Maybe my wife is cleaning up and unplugging my router again. She loves it. I love it when she does that. Okay, on the actual YouTube page, it's got a little orange sign saying viewers may be experiencing minor issues. So, potentially. All right. Well, we'll go into the actual news then. We don't want to muck around too much if the stream is mixing in and out. Try refreshing your page, guys. That will allow you to get back access. All right. So what I want to go over is not so much what this BOJ stuff is today. I really want to just focus on what I can with you to get you the most information as potentially possible. We're going to look at the Citibank AMFX reports. Once again, we're in the FXWW chat room. If you like them, go to their website, sign up, around $50, $60 a month. Not too bad. So we're going to look at Mondays, and then we're going to look at Tuesdays, just to get a contrast of if these guys know what they're talking about or not. Brett Donnelly is a pretty good analyst in my opinion. Alright, so yeah, pretty sensationalist headline on Monday. And it's true. People have called the end of belief in central banks a few times in the last couple of years. And when monetary policy is no longer effective, there's going to be a huge problem if there's a downside in the economies. All right, you can imagine, right, if there's a recession but the interest rate is 0%, how do you stop it? Is it the loop? You can't handle it? Did I break the internet? Alright, so, so this whole idea that central banks are going to become ineffective is a really big concern to the market that's have a fragile recovery. You can imagine if they lose faith in the Fed, like they lost faith in the BOJ. Remember what they did when they lost faith in the BOJ? Nikkei got smashed. Let's bring up what happened in the Nikkei. As they announced that major announcement. Now this is deceiving chart. Okay. That day there, that's 1,000-point range in the Nikkei. I mean, if we got 1,000-point range in the Dow, we would know about it, right? For the Nikkei, though, that sort of big move happens a fair bit. But, this is the beginning of the disappointment in the BOJ, that they're no longer going to cause the dollar yen to rally. Dollar yen collapsed from that 120-ish level. You may remember it was back there for a long, long time. And then basically traders came to the view that the BOJ had run out of steam and the market left it to its own devices, basically sold bought back the yen quite aggressively. Now the same thing is going to happen probably at some point with the US dollar, and the stock market's also falling quite sharply in the US because they are artificially high. Same with the bonds, they're artificially high, and when support is deemed to be close to disappearing, the market front runs that move. It happens well before the end of QE, right? It happens around about now, as the Fed pulls out of QE and the ECB nears the end of it, and forget about the BOJ. They've already lost their legitimacy. All right, so keep an eye on this is what happened to Nikkei. This is a pretty big ravaging. It was a 25% decline in the Nikkei in around about 6 months. Although a fair bit of that was on the back of Chinese devaluation. All right, so is this a big one? The reaction to rate cuts is backwards. First the ECB, then the BOJ, now the Bank of England have cut rates and the markets have rallied. Yeah, that's true. You remember that? What's happened with the BOJ, it's happened with the Bank of England. And central banks have been asking for a while that monetary policy, fiscal policy, it starts to help out. The logic behind having negative interest rates and negative yields on bonds and how it affects the markets has been widely criticized, from Bill Gross to heaps of market analysts, right? Just like, what are they doing, and who is buying these, and who in their right mind would buy these, and how can this be a safe investment if the capital losses on a reversal are going to be so great? And the question is put right. Okay, is this the big one? Is this when it begins? And how's the Fed going to try and slow it down? So this is Monday's report, and the big line that they put in here: the market is lining up to fade a dovish Brainard. Now, we got that right. Market rallied, and then faded it down. It's smack on what to do on Monday. Now on Tuesday, the whole feel is that the market is not ready for this. The market is not positioned for this. And what's the best ways to play this? And this is a really good point. The Fed is not hiking in September, yet Aussie dollar and the bonds are near the year lows. And it's going to require some pretty crazy things here to get the market to short circuit. There is a way for I believe to happen, 3 ways. One way is not talked about here. It's the BOJ is talking about buying foreign assets, which is buying foreign bonds. If that happens on September 21, then that's going to give obviously a relief rally on the bond markets, which is going to stem some of this issue. There's been some concern from the Japanese whether they can do this or not, but it's the talk of the town right now. That's what the Japanese are doing, and one of the reasons why dollar yen's rallying today, and also just generally, even as stocks have been falling. The other way I've talked about before, the ECB comes out and makes it clear that they're really looking at extending their QE program past 2017 in March. That would help stabilize the bond market. And also just somehow if the market rebounds and works through this issue. Yeah. Now, the way they want to play this is long Euro Aussie, short Kiwi against the US, short Euro pound against the US. The pound against the US is a different sort of trade, but it's true here that when volatility spikes up, the Euro Aussie rallies. I mean, the Aussie US falls off as well, but the Euro Aussie moves a lot more pips. Remember during the Chinese devaluation, the Euro Aussie spiked 500, 600 pips in a day. It's one of those big movers when the market crashes. And because of the BOJ action, the usual go-to is selling Aussie yen, but we may not be able to sell Aussie yen in the current market if the BOJ does enough to sort of stem the dollar yen fall, which usually happens if stock markets are falling. The other trade, short Kiwi, is just another way of shorting high yielders, and I like short Aussie because I don't want to be stuck short Kiwi into the RBNZ, where they should not cut rates this month, and they may not jawbone correctly again, with Wheeler being proven an unreliable ally in the FX market, right? So the RBNZ governor is pretty terrible at jawboning, and that's his main job. So with the pound, they think that the market's got too rosy with the UK economy just on the back of those PMI data, and they're probably making a good point. I'll suck it into the same trade. I got really bullish on the pound. I still think there's going to be some nice surprise data in the next month or two, but well, let's just see. There would have been some UK data just out now. Sorry, guys, I want to check that. Sorry, I was preparing this without checking that data for you. Came out earlier today. Okay, earnings was a bit stronger. That's good. Wage earnings growth is very important. Claim accounts a little bit negative. Okay, that's decent data. That's decent data. I'm not going to reverse the pound, but it's decent data. Something to keep an eye on. So he wants to be short into the UK retail sales. And remember, retail sales last month was stellar. Okay, stellar number. So he thinks it can't sustain it. There's going to be a reversal, and he wants to be short the pound into the retail sales. That's tomorrow, before the BOE. I think the BOE is going to be dovish. So yeah, let's just see what happens. But definitely the pound's become a much more difficult trade in the last few days. So that's our trade ideas here. Long Euro Aussie. We might enter some long Euro Aussie just so we can give a little bit of support and also guidance on this trade if it does come through. I bought already earlier today at 150, but not on this account. So I will buy a little on this account just to make sure we've got some exposure to the short Aussie trade going forward. But yeah, things are definitely going to heat up in this market, guys. This is really a good time to be trading, because we've last few months we've been falling asleep with the lack of volatility, and the euro is going to wake up one day, right? The euro is going to wake up, and we're going to get some moves, and hopefully it's a sustained move. I'm open to both directions right now, but yeah, I'm really interested to see the Deutsche Bank. Jim Reed. We read him every now and again. I want to see what he says. I'm not sure if there's on this one here today. They don't have it. Oh, it's not FX. All right, but the way we're looking to be exploring this is going to be short Aussie, the main way. I'm going to bring up the technicals now. We're just going to have a little look at that. And then maybe if there's time, look at any particular trades you guys have. PM me, guys, and I'll look at a particular trade. I think we covered the pound enough there, mate. Asking me for the yeah, a lot of people are selling the pound on this fake rally idea, US dollar recovery, risk aversion type idea. Yeah, I don't know. Don't think about that. These guys have got a ridiculous new moving average that's even different before the other one. I mean, I don't think I've seen the same 200-day moving average on two reports yet. Oh, DAX. Yeah, I want to get short the DAX. We had a good opportunity to short the DAX a little while ago. So Trade Wizard. Now the issue with the DAX only is that the ECB comments that I expect to come relatively shortly in the next week or so, it's going to hit you pretty hard on the top side. So if you get stuck short at the wrong level, you'll be in trouble. So risk management is extremely important for this trade. 10.5 was a pretty big level for a few weeks. Seemed to hold pretty nicely. I think it's going to hold again now on the downside. So any rallies up towards 10.5, stops above 10.5 or even 10, say 10.570. That's pretty much risk reward down to 10,000's very achievable. Things heat up. I mean, this is a market which is sort of like holding on still. It hasn't really flipped into full bear mode. When the DAX goes full bear, you'll know about it. One of those type events. Margin call that day. Don't have enough power, Scotty. Credit cards don't have enough money, Scotty. Not enough time to get a bank transfer in there, Scotty. Can't hedge here. Can't hedge here. Let's just see if we can survive. That was a pretty brutal day. That was a 1,000-point move. Pretty much back up to 10.7 though within 2 days later. So it was that final capitulation move. You got to be able to handle capitulation moves. Aussie Kiwi's probably going to have a capitulation move, right? All the longs give up at once. That's a golden ticket, guys. We wait months for capitulation moves. Dollar yen does it really well. So I moved back to 10,000 is nothing. Really achievable. And doesn't require too much of a big story to develop for the bond market, just a moderate story, and for the market to believe that there's an issue. And it might take a little while though. Pre-Fed though is the timing, right? We want to get there in the next 6-7 trading days, but that's easy done for the DAX. So we'll see. Selling a little bit higher towards 10.5 is where I'll consider it, mate. How much did I pay for Icon? This is Icon Messenger, mate. It's free. You'll get a copy when you sign up for FXWW. You can get Icon Lite, which is a new product for retail traders. It's around $100 a month, and it gives you FX related news and information, options information, and a few things. But it's not the full Icon package. The full Icon's $1,000 a month. I have one of those at work, but I mean, use it every now and again, but it's pretty expensive, $1,000 a month. Internet these days has opened up the playing field. I mean, you can get access to really good information for less than 200 a month total. Yeah, this doesn't look too weak just on the charts, but it's if you believe the story, then this is easy for. All right, so the euro, we are just going to bypass the euro until it breaks out. Dollar yen, doing some shenanigans. I mean, I'm really interested to see how the BOJ plays this next week. I suspect the market's going to be disappointed, and that could lead to the issues in the yen crosses. If the dollar yen tests 100 again, it's going to be hard to stop it. Now this one's more interesting for us because we like the whole buying the pound on dips thing, and we've had a hell of a dip now. Look, I really should be supporting it more. I just understand where the bears are coming from, and I like the US dollar at the moment. So unless we can get some data to support, and the data was pretty decent at 6:30, so that's only an hour and a bit ago, then, and we need a little bit more, maybe that UK retail sales tomorrow comes in strong, we can talk about buying the pound more aggressively. But if that UK data tomorrow is weak as well, and the BOE's dovish, this trade's gone. Any sort of hope that we have for short-term short squeeze, because we haven't had the short squeeze yet, he's going to be off the cards. Short squeeze almost started. It's gearing up. I think if we got to 136, the move to 140 would have been really quick. All right, but the market just got caught, legs chopped out by this new bond story, right? And also the data just disappointing. You can't have a recovery trade without recovery data. Don't blame me, blame the UK economy. Not holding up their end of the story. Dollar Swiss, yeah, it's hard to trade. It's like the euro. Meh. Okay, Aussie. So, Brexit lows, 73.20. Let's see if we can bust some of these next levels. It looks pretty likely now 75 is being taken. And the Kiwi dollar we've discussed, it's still in that uptrend. It hasn't turned bearish yet. Once it turns bearish, it's got to play catch up with the rest of the market. And you've got a lot more stops to hunt for the longs here. So, yeah, the Kiwi is in a much more precarious position than the Aussie. Aussie is already weak, right? A lot of damage is done. The Kiwi is just beginning. So I really like the Kiwi short as well. I just I'm playing it via the Aussie. I just don't trust Wheeler, and Wheeler's not that long away. They've actually changed the date of the RBNZ to be straight after the FOMC as normal, or the Forex Factory's corrected the date and was wrong the first time. I didn't go check RBNZ website, sorry. But yeah, it's as normal. It's right after the FOMC, about 2 hours later. So that's going to be a great little trading day. You can sign up for Icon and just become a messenger and talk to people. A lot of traders use it. But usually those are working in an institution, right? It's not WhatsApp. It's not widely used by the public. I don't think you can get it from the App Store. Maybe you can. I don't know. Now, have we been ignoring dollar CAD lately? Yeah, a little bit. I mean, we've got enough action with the Aussie and the Kiwi. It's in a similar boat. Dollar CAD's going higher as US dollar gets stronger, and the high yielders get smashed. CAD's not really that high yielder, but it's clumped together with the same group, Aussie and the Kiwi. The bit that's a bit more tricky with this pair is that the oil movement. We have an OPEC meeting early next week, and a lot of the stabilization and the strength of the oil price in recent weeks is on the fact that they've talked the talk about a price freeze and some sort of unity, right? That they've failed every time they've they've sort of talked it up, so I'm not 100% sure that they're going to be able to get an agreement. In fact, I would bet against it if I had to trade oil. So let's just see how they come out with. You know, it's an informal OPEC meeting. Also, Russia's going to be there. Russia's not part of OPEC, but they're the largest oil producer in the world, and or energy producer anyway. Maybe not straight oil. So it is a big boy event, and it's going to be a volatile day, and that's going to impact the CAD trade. So I might play elsewhere. And Euro Yen surprisingly strong as dollar yen's picking up on that BOJ talk. But if the BOJ disappoints, then this trade might revert back towards that 112 level. So no reason to get aggressive in the Euro Yen just yet. Euro pound looks a little messy. I get the feeling of all the trades I have ideas about right now, this one's going to cost me money. I've got this faith in the UK economy that I don't know if it's warranted. In the ability to bounce back from adversity. And that we're literally very cheap and there's going to be a rebound in the pound generally, broadly. I think that while that might be true, you might not get that as early as traders want, as I want. And so, yeah, I'm frustrated by the pound at the moment. Alright, guys, that's all the text today. No need to go into the BOJ just yet. We'll have time for them later. In terms of the BOE, tomorrow we're going to probably do that live. I'm not sure if that's set up on the stream at the moment. Stream schedule. Alright, looks like I'm streaming the BOE live. Excellent. Alright, so that's later tomorrow, and that means we'll be doing it instead of 9 GMT, we'll be doing the stream at 11 GMT. So that will be interesting, that'll be a bit of fun. Good luck with your trades, guys. Keep an eye on the stocks. If they start to rally, maybe someone said something. If you don't have access to something like Reuters, then use Twitter, probably is quickest. Get an FX Twitter account, just subscribe to the right Twitter people. Or get a delayed reaction you'll find at Forex Live. Or if I'm in the room and you ask me, I'll be able to find for you pretty quickly as well what's happening. Alright guys, good luck with your trades. I'll be back tomorrow at 11 GMT.